inflation from the monthly indicator has been quite steady over the last 3 months, much lower than it was a year ago or so, when we were really fighting those inflation demons. But when we look into the detail of it, we do continue to see some of this persistence of inflation. And that means that we're still getting price rises in those goods and services where it takes a long time for prices to correct or fall.
Is there any reassurance from today's result that we are starting to get on top of that?
Look, at a headline level, we've got inflation now on that monthly indicator running at 3.4%. It's still above the policy target band, but it is much lower than it was, and we are seeing several things that should give us confidence that inflation is slowly moderating. Firstly, we're seeing globally goods prices are falling in many categories or not rising anymore, things like clothing, furniture, for example. And then domestically, we are seeing the economy slow, we're seeing the labour market slow, and we think that wage growth has peaked. And over time, wage growth should moderate, and that should flow into some of those services prices that really have been ratcheting higher over the last year or so.
Will inflation take longer to moderate if the Fair Work Commission accepts the government's submission to raise the minimum wage by the same rate of inflation?
So the Fair Work Commission obviously sets wages for the national and award minimum wages. Now that flows through to about 15% of wages paid nationally across the economy, and it influences wage setting in other jobs as well. So look, it is important. A lot of that will come down to what's already baked into the forecast of the Reserve Bank and ourselves. We've baked in a 4.5% assumption for the Fair Work Commission. So if anything, given inflation's coming down, it looks like we might get something a little lower than that. And that should give us confidence, again, that inflation is slowly moderating back to target.
Retail trade figures are due out tomorrow. Will we see further evidence of an economy in decline?
We are expecting a very weak retail trade outlook. It's always bumpy month to month, but when we look at the January data, we had the weakest annual year-on-year retail sales start that we've seen in a couple of decades, actually, and we think that continued in February. What we're seeing is two things. On a per-person basis, spending is continuing to contract as households tighten the purse. But we're also seeing population growth, which has peaked and is starting to come down from very high levels. So I think we will see a weak result, and I think the months ahead will show ongoing weakness in household spending.
Last week, the RBA board said it couldn't rule anything in or out when it comes to the setting of interest rates. Is it now clear the next move is down?
I think the next move is almost certainly down. Economists and policymakers are always hesitant to put a 100% chance on anything. We've been hit by so many shocks in the last few years. But we know that inflation is lower than it was, and we've got these leading indicators that the economy is slowing. So providing we don't get any shock that sees a re-acceleration of prices, examples of that could be something globally that sees good prices shoot back up. Then the next move should be down. That's certainly our expectation here at Barrenjoey. But I think we're going to have to be patient waiting for that next rate cut. We don't have it in our numbers until towards the end of the year. So, as I said, the next few months remain very challenging for households. But if we look towards the end of 2024, we should get some reprieve from rate cuts and also, of course, income tax cuts that will flow through household wallets.
Given the state of the economy, how much room is there for sweeteners and further cost of living relief in the May budget?
Look, not a lot, because inflation is still high. So the government's clearly trying to balance this need to bring inflation down, but to support those families and households that are really, really struggling. I think we will see some cost of living relief, but I think, again, like last year, it will be highly targeted and temporary. Extension of electricity rebates is one possibility there, where we can really target households who predominantly spend on essential goods and services and just ease a bit of the pressure there.
Jo Masters, thank you.
Pleasure.